customer, right? So I think it is about advisor education first and investor education next. And there is this huge opportunity for you, because you are the ones talking to the customer, to deliver very high quality investor education. So I've tried to use the time that I had to show you some tips and tricks there about how to get there. So that's it from me. If there are questions, I'll happily take them. Prem wanted a to-do presentation from me, so I hope I've met that mandate, Prem.
Thanks a lot. That was an excellent presentation. Now there are there's a question. It's a little tricky. Rajneesh has linked education to ways to acquire new clients.
Pardon?
Rajneesh Shah has linked investor education as a way to get new clients. Would you agree with it?
Yes.
And what would you tell him how to do it?
Yes, see, you have to know to be able to educate, and education always gets you customers. It's very simple. Let's not make it sound so difficult. Let's assume you're in a wedding, and somebody X is asking you, sir, आजकल equity में डालना चाहिए कि नहीं? So you start saying, what will you notice? A crowd will gather, correct? New customer for you, Prem. You talk sensibly, people will listen. Right? So it is not very difficult to be able to, get people to see the point that you're making. It is just that as long as it is substantiated by data, your communication is complete, and you do it consistently again and again, people will start taking notice. Yeah, so that is key to education. Like people associate me with talking breathlessly. Yeah, they say Uma doesn't pause, just goes on and on. Yeah, so there are things like that. People start identifying you like that.
Now, Uma, you recently launched a website which is essentially about investor education.
Correct.
2 questions. Why did you launch it?
Okay.
Okay. And second, why have you used videos exclusively?
All right.
There's not much of a written content there.
All right, all right. So Moneycraft is a new website that CL has launched. Now, this is a free investor education website where we use 2 to 3 minute videos to explain one particular idea. And as Prem was saying, primarily it uses the video format. Now, the primary reason this was launched is because of my faith that people learn based on a context. So I can put all of you in a classroom and I can give you an entire lesson about time value of money. You will forget it. But when somebody tells you that product A gives you, 100 rupees every year for the next 10 years, product B gives you 200 rupees, but this is the 2 different prices, then you will wonder how to compare. And that is the time at which you want to know how to use time value of money. Or in other words, my belief is adult learning is contextual. We want to learn something which we can put to use immediately. That's my belief. And therefore, Moneycraft's primary reason is you are out there with the customer, or the customer has a decision to take, or an advisor has a concept to explain. At that point, if they want to ask, what do? We Google. And we don't know whether to trust the information we get. We don't know whether it is reliable. We don't know whether the person publishing it has an agenda. We don't know whether to trust it. So since we don't sell any products and we don't have an ARN, we decided that Moneycraft will become that go-to place. So if you're in a situation, you're going from customer A to customer B's house, and customer A asks you this question, what is negative yield? In the car, between those 2 meetings, you can Google Moneycraft and say negative yield. A quick 2-minute video will come and it will tell you what it is and help you prepare before you go. So that's really the idea. There is a place you can go and learn quickly, right? Learn quickly. And I believe that a video format helps you much better than the written format, because I think just like how is it people don't like numbers, people also don't like reading. So a visual media is faster, less stressful and faster. So that's why we've done Moneycraft, and we hope it's a new website. We hope over a period of time it will become the go-to place for learning things. We keep adding videos to it, and any suggestions, any ideas, most welcome. Thanks, Prem, for allowing me to talk about Moneycraft for 2 minutes here. So that's it from me.
Wonderful presentation.
Thank you very much.
Okay, at heart, all IFAs, I believe, are entrepreneurs. Right? All IFAs are entrepreneurs here. And when we talk about entrepreneurs, in India, one of the people who inspires me most is Nirmal Jain. Nirmal Jain, as you know, has founded and runs India Infoline. The wonderful thing is that I've been able to watch Nirmal, albeit from a distance. But I've watched him and I've seen his evolution over the last 2 decades. So today, I've called upon Nirmal to tell us about what it means to be an entrepreneur. So while the topic says that it's about how to build business for a better tomorrow, I think it'll be worthwhile for us to listen to Nirmal share his insights about what it means to be an entrepreneur and how he has evolved this business on his own. And the wonderful thing about Nirmal is that he has been able to adapt to changing times. The number of evolutions that I've seen India Infoline go through is amazing. The first evolution I remember was as a site which used to put up free research. That is the time when I first became aware of India Infoline. And from there, you've evolved, and I think you've tweaked your models, and it's always been for the better. So, Nirmal, please come and share your insights with us. So let's welcome Nirmal with a big...
Thank you, Prem, and thank you, Cafe Mutual, for giving me this opportunity. And a warm welcome to all my friends from the same industry. I think you have a long day, and you had a very enlightening presentation from Uma, who's probably the best trainer in the industry. And maybe Prem had planned a break because you hear so much about mutual fund. So you might get bored, or you might need a little bit of break from the educational session. So I think I'll just talk about something which has nothing to do with mutual funds, something which has nothing to do with IFA as such. But of course, business is similar. Some of you would remember that originally our theme was, or the tagline was, it's all about money, honey, when we launched our website. It used to be called indiainfoline.com, and it's all about money, honey. This obviously was a tagline which in Indian context evoked mixed response. There are many people who did not like it. They said that money and honey and all those things are not what we appreciate or what we like. This is what I can take it to run the slides. Okay. And I can change it. Okay. I have to click to move forward. Okay. Now, I think even, so whatever lessons I'm sharing here are my learnings or my beliefs, and there may be prejudice in it. So I'm not saying that they will hold valid in all contexts, but what I'm trying to share is whatever I have learned. I learned in a particular set of environmental circumstances and colleagues and in the business that I operated in. But I think I'll just share with them, and you can take them as much as you like. First thing about money, many times I have heard businessmen, sometimes government people, officials or regulators, they don't like to use word money, and they say that no, it's not all about money. It's not that we are after money. I'm doing this for my passion, or I'm doing this for some more altruistic objective. But whatever I've seen is not only my own business, but I've seen many entrepreneurs, many professionals getting into entrepreneurship. I think the first thing any entrepreneur, and I'm sure all of you are entrepreneurs, would agree with that, is that you must have to have a sense of money. Money is like what, runs or wickets are for cricket. Of course, you don't want to earn money by foul means or by breaking the law. Just as you don't want to score runs or take wickets by some foul means, you don't want to, you don't want to use something which is against the rules of the game and say that I win. Nobody likes that, or nobody will have satisfaction with that. So it's just like goals to football or runs to a match of cricket is what money is to enterprise. And I've seen that many times entrepreneurs who are successful have somewhere at the back of their mind that how much money is coming in and how much money is going out. I think whether they're in the bathroom in the morning or in the night or in the wee hours of the morning when they wake up, money talks to them. And at least for me, it has always been because question of survival, because if your money that you are receiving is less than what you are committed to pay, obviously you run out of money, and what we call bankruptcy or what we call, it can be cash flow bankruptcy many times. There are many businesses, they are profitable and still run out of money because they don't manage their cash flows. So they are huge receivables and they can't make commitment, fulfill commitment in time, and it's like a heart attack in a healthy body. So I think all entrepreneurs must understand, must love money, must respect money. It's not that you have to earn money by any means, but you must understand money. Otherwise, it's very difficult to run a business to my mind. It's like you want to play football, then you can't be like a priest that I'll come in a queue, I'll not push anybody. Obviously, then this game is not for you. Then the second point that I want to highlight is the vision part of it. In fact, Prem has seen me closely for the last 20 years, and he did say that he has seen business evolving from day to day. So obviously what I started with a vision of 20 years ago and what actually happened would be very different. But today, if I had to sit on stand on a podium and talk about vision and everything that happened last 20 years, so let me give you two stories, the real story and the real story. The real story is what I can talk about and people will appreciate, and it might be, it would be consistent with all the publicly known facts. And the real story is what actually happened to me, of course, and my colleagues, my family, and everything around. So the real story I can say that, okay, I'm a chartered accountant, cost accountant, I'm MBA in finance, so I had a strong background in financial services, or finance, and I could see the future in financial services. And in the early 90s, when the reform started, I was clear that financial services will grow much faster. If our GDP has to grow at 7-8% in real terms, that is a nominal growth of almost around 14-15%. That means that in 6 years' time, the GDP doubles, and then financial services industry can triple, because always in the development phase of the economy, financial services grows faster. So I could see the huge opportunity. So I decided to build it brick by brick. We started with information services or the research, which is the core of it. Then we started distributing mutual fund and other products. We added insurance, we added equity. We started with retail, then we got into wholesale or our institutional business. Then we got into the higher segment, which is wealth management, and this is how the entire organization has been created. Now, this story would sound very credible. This is what most students come to listen to. But the problem with vision is that you always call entrepreneurs who have been somewhat successful to share their vision. I don't think anybody calls a startup, says that, tell me your vision, and after 10 years we'll check whether your vision come true or not. Now let me tell you the real story. The real story is that I worked with Hindustan Lever. So first I set up research for Motilal and Ramdev for a year and a half. I wanted to be an entrepreneur because I am from a family of entrepreneurs. But when we started, I thought that, okay, I'm like sort of, we are intellectual, so highly educated, we'll do something research. And okay, let me tell you how this also got into it. When I worked with Hindustan Lever, McKinsey's first assignment was with Hindustan Lever. And I really envied them because they are not accountable for profit and still they get a lot of respect. So there's a 28-year-old kid who can walk into some entrepreneur who's his father's age and ask him, you want to sell your business, he can advise him. And basically they can get away with this. So I thought this is the best business to be in, because I've seen my father being a small entrepreneur, that what kind of stress you go into as an entrepreneur. So here, I mean, you just can give advice, a sort of blessing, and you are really well paid. So I started as a research firm, originally doing consulting assignments. So I got some assignment from my then ex-employer, Hindustan Lever, where I worked. But then I realized that this model can't be scaled up. Then I saw how Bloomberg has been successful. That was a terminal, and that is what internet was coming to. I knew very little of internet, but we got into internet because internet was the hype, was the flavor of the season. We got funded, and we also did not know that how private equity investors started approaching us. And once we got funded, and then we thought, of course, as I said, being an entrepreneur or being somebody from the family of traders and entrepreneurs, I realized that someday the business has to make money. Because it's just making valuations and everything, but business has to make money. So we started advertisement on our website, which was the media business. What Prem was talking about, that website which had everything. And soon we discovered that in Indian context, people don't want to pay for research, people don't want to pay for information. They want everything free. And I'm sure Uma would have experienced similar things. And so we realized that this business can't be scaled up so much. And when we are doing research, I'll just tell you another story. That my cousin, who was a CEO of a pharmaceutical company, so we wrote a beautiful report on pharmaceutical industry, which would have taken 5-6 man-years, a lot of visits to doctors, a 73rd patient, trying to understand the names of the chemical, get pharmacist, everything. So I thought that he should be the first customer, and it was just priced at 25,000-30,000 rupees. So he looked at it. I mean, he had come to our office on a Saturday. He said, yeah, it's good, but we have all the data. You meet my CFO. And at the same time, I got by mail from a friend, report on automobile industry. And by mistake, maybe the dispatch clerk had put in 2 copies. So he saw those 2 copies, and he said, oh, you got 2 copies, can I take 1? So I realized that if something is free, is not related to his business, his automobile industry, he's a pharma CEO, he's willing to take it. And if something which is for his business, he has to pay 25,000 rupees, then he's hesitating. He's trying to ask for, meet my CFO, do this, do that. So in that frustration, that day, when we had a very small team, we have put up everything free on the website, because this is how this country is. And in fact, first ad that we ran was that we are killing our business model, and from tomorrow everything will, whoever wants anything free can write us a mail. I think that ad, that quarter-page ad, got maximum response in my entire career, what I have seen, because we are given full-page ad also. None of them got so many responses. That got almost about 50,000 odd responses. Because when you said that we are closing down our business and everything is free, then everybody wants to have a copy of it. That gives all sector reports, company reports. So next day what we did, we launched our website and sent out a mail that this is the link, just go there and you'll find everything free. So from there, as we realized the advertising model is not working, then came the equity broking, because we realized that people make money by broking and by transaction and not by information. Now, if you had asked me before that, now it was very hesitant to become a broker, because in our family, I have seen that, we come from a trader family where brokers are looked down upon. In fact, they'll say Dalla or Dalali is something which is not a good thing. In fact, any self-respecting father of a daughter won't give his daughter to a broker if he's from a trading family. In those days, I'm talking about 20 years or 25 years ago. But then there was no choice, because if we get into broking, then we can make some money. We thought, fine. So we wanted to get into broking on a technology on the internet model. We started working on that. And there's the time we started distributing mutual fund also. And I can empathize with you. I understand how difficult it is to sell mutual fund, because we did that for quite some time. And you get a small ticket, and there's always a lot of hard work that goes into this. Then came the crash of 2000 or 2001, when we actually ran out of money, and we almost bankrupt, and we just wanted to survive. In fact, we were run out of cash. So it was really difficult, because equity markets were in doldrums. I mean, you've seen when equity markets are bad, what happens to the entire business model. Sorry, I'll have to finish. How much time I have? Okay. Then I knew Sikha, who was the CEO of ICICI Prudential, and Venkat also, my colleague or my partner, had worked with her. They said that if you sell insurance, then we'll give you some advance. So we needed that advance money desperately. It was about 1 crore rupees or whatever. But before that, if you had asked me that, Nirmal, will you ever sell insurance? And if you had woken me up from the in the night and asked me whether you want to sell vegetables for the rest of your life or insurance, I would have said vegetables. And I know that how life insurance agents used to come to my house on Sunday morning, and how my father would get bugged with them every time. And he would say that if you are a man, you'll always be chased by somebody. If you are an unmarried man, then you'll be chased by unmarried girls' fathers. And if you are a married man, you'll be chased by insurance agents. So, and you know that if you sell mutual fund, it's fine. But try selling insurance, you'll understand what it is. Obviously, But still, it was question of survival, and we thought, fine, we'll struggle and try and sell insurance also. So when we took that agency for first 2 months, we could not sell a single product. Then we made some of our colleagues buy it, and then we learned how their product is different and how that is sold. So we went on like this. Then in 2002, we had almost, after 6 months due diligence, I can't name, but there was a good house. We sold our business. We wanted to sell the business and get out of it. And the deal was done at about $1 million that time, which is 4 crore rupees. After paying liabilities of 2 crores, me and my partner would have had 2 crore rupees left. And we thought that this will be nirvana because we'll survive, because it's really painful, those years of 2001, 2, 3. And it was not our vision that the transaction did not happen. Actually, the potential buyer that time, who was negotiating, he backed out. They backed out. And why did they back out is a story probably some other day I'll write in my book. But after they backed out, we really were frustrated because for almost 7, 8 months, we had given all the information, done everything. Then we said, forget it. We'll either run this business or let it go down. We'll just not try to sell it again. And as luck will have us, have it, this was about 2002 end. And in 2003, stock markets just took off. I think if you go back and see the price chart, it's 12th May 2003. I remember this because 11th May is the day in 1999 when we had launched our website. And after that, because we had some software which was working, volumes just took off, and we actually made more money than what we expected. So in the 2003-4 itself, we made about 8 crore rupees, then we made 20 crores, and it just went on. And in 3 years' time, because the stock market bull run we started in 2003, lasted till 2008. So in 2005, we came up with IPO. And after that, I think, maybe I'll share more with you in the later slides. But then we survived, and then we kept growing from strength to strength, and where we are today, you can see that. I said that we kept tweaking, and Prem also mentioned, we kept tweaking our business model from an information website to broking, to mutual fund, to life insurance, to institutional broking, to wealth management. But one thing was there, that we remained focused on our core competency. Because the set of people, we thought that we understand financial services, we did not digress from that. And even when we raised a lot of capital later through IPO and through private equity, some of the firms got into power or real estate or any other businesses. But till date, I think we kept our focus clear, and which is our core competency, which is financial services. So, as I say that the earlier slide, vision is 80% hindsight and 20% foresight, because in 1995, I did not know what will happen to me in 2015. Forget about 2015, I did not know about 1996. So we kept taking one day at a time and growing our business or taking the opportunities as they came along, but we remained focused on our business, on our core competency, which is financial services. Many times there are people who ask this question that how much you have to work hard as an entrepreneur if you are in job or whatever. I think that's not a great question. I would say it's a silly question, because if you're an entrepreneur, you love your job, you don't have to work a day in your life. And I think most of the entrepreneurs, of course, they have to make work-life balance and all those things. But it's not that they look forward to Monday morning. Going to work is fun, is joy, is thrilling. And of course, the ride has been roller coaster. But I don't know how many of you have gone to amusement parks. You'll always see long queues on roller coaster, and merry-go-rounds will have some old people or some housewives there or some small children. So it's always more thrilling to have a roller coaster ride, and that's how business is. And in the early years, we used to work almost, when we were putting up our website, throughout the night we were in the office, not only me, and all my key colleagues, and nobody asked them to stay back, but there was passion, there was joy, and there was fun. And now also when there's some goal, some mission, some objective, then we have seen that, people love working hard. And most of the IFAs that I know who have been successful, if their clients call them on Sunday morning or on any Saturday evening or whatever time, most of the IFAs, they love their work, and they'll end up at client's place at whatever time they call. This I told you about, the time we almost had sold our business, but in fact, we never communicated anything which was wrong. and actually, I forgot to tell you about this. When we sold our businesses before that, there was a crisis of cyberspace. When there was 2.5, 3 crore rupees of capital was stuck because BSE and NSE both withheld the payout, and we had no control over it, and that was our entire net worth. And there was this scam which had broke out that time, cyberspace. So the money was held up, and the client had got the money. So our entire net worth was stuck there. Me and my colleague, we fought a lot, but you know how systems are. Matter got into legal, CBI, SEBI investigation, everything. We got our money back, but guess when? We got our money back from BSE and NSE both almost after 7-8 years. So by then, I mean, we somehow managed to survive. Whether that money had lost, that money which was blocked actually could have made us shut down our business because we had no other money left. And we somehow managed to survive is a different story. And by the time that money came, that money became relatively insignificant for us, but still, it was just vindication that we did not do anything wrong. So in those years also, when we had private equity investors, whenever this scam happened, whatever happened, we disclosed them the correct picture. And we disclosed them that this was the balance sheet and this is what has happened. I could, whatever little money I could get from my family, but that was also not enough. So some of the private equity investors put in some more money in the company, which was just about crore and a half. I mean, that money doesn't look big if you look at our balance sheet today, but that was something that we needed to survive. So after 2005, when we got our capital through IPO, then again, as an entrepreneur doesn't have to take risk or put his life at stake every morning. But whenever you see an opportunity and where you see that your risk-reward ratio is in favor of reward,